FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
When it comes to gold, trends, miners, I always look to see what Jeff Clark's doing. He's editor of Big Gold over at Casey Research, literally has mining in his blood. Jeff, welcome back to the show.
Great to be here, Kerry. Thanks for having me.
Hey, so, man, we've been on a roller coaster for the past 2 years. I've got people who are angry at me. I don't know why, because I always tell them it's an insurance policy, and I don't check the price a lot of days. But your opinion, what's going on with the price of precious metals now?
Well, I think there's good news. Like you said, we were in a, call it what you want. If you want to call it a down cycle, a bear market, whatever you want to call it. I mean, gold sold off for over 2 years. And the good news is, in my opinion, that's coming to a close. And I don't base that on my gut or my feelings or my hope. I base that just on what the data and everything is telling me. And the data to me, in spite of what gold is happening, what's happening to gold here in the month of March, I think there's a major shift underway, and that the bottom is, 98% in at least. And the reason I say that is because GLD holdings were, crashing for 13 consecutive months. That has shifted. Now they're positive. Speculative long positions are growing. There's a shift in bank sentiment. Some of the banks that have been, 100% negative, now some have gotten more positive. There's been an increase in M&A. You've got Goldcorp and Hudbay. Both are trying to do hostile takeovers. Sprott's having a lot of activity right now with things they're trying to do. And another interesting thing I've noticed that not a lot of people know is that private equity groups have started to step into the mining sector. As an example, the BMO Metals and Mining Conference, which you probably know, is probably one of the biggies of the year for institutional investors. You got PDAC, it's probably the biggest for retail, but the BMO conference is probably the biggest one for institutional guys. Last year, in 2013, at that conference, there were 3 private equity groups there. This year, just last month, there were 40. So you've got a serious interest by some major players with a lot of money that can, literally with enough money, they could take out an entire company. So that's how much money could move into the sector that is showing interest in the sector. There's even more. There's been a lack of hedging by producers. I remember late last year, there was a lot of scuttlebutt about, the miners are going to start hedging now, and look out, they might start hedging. That could really be put the nail in the coffin of the producers, Well, just the opposite happened. As of Q3 2013, hedging by the producers was at the lowest level in 11 years. So just the opposite was happening. And that was right after, if you remember, gold crashed in April, then it crashed again in June. That was right after that. So they're not hedging at all. And then we could spend a whole show on, Chinese demand. I mean, that's just in runaway levels, jaw-dropping levels. One thing I'll point out about them, though, not a lot of people know, is that in the Shanghai Exchange, they trade gold, but they take physical withdrawal. They actually take physical delivery to a much greater extent than we do in the COMEX. Their withdrawals in the month of January exceeded world mine production for the first time ever.
Wow.
So that happened after the gold price crash. So they are serious about the amount of activity that amount of gold that they won. That shows in their activity. Another quick little thing I'll point out, and you're going to have to stop me here because I got a lot to say, but Standard Bank in South Africa wants Deutsche Bank's seat on the London Fix. You think, well, what's the big deal there? The big deal is that Standard Bank is 20% owned by China. So China could have input on gold's daily fixed price. So central banks are still net buyers. I mean, you can go on down the list. There's so many things that are telling us that the market has shifted in spite of what the price does in any given day or week the market has shifted, and I really think the bottom is 90% in. So the biggest thing for me is the long-term picture, and we can talk about that if you want. But
Sure.
but those are all the signals that tell me that I think there's a major shift in gold.
So, Jeff, do you think that the Western central banks care about gold or the price of gold?
That's a great question. You're kind of hinting at the manipulation argument there, and I understand that.
I'm not talking about that. I'm just saying, from a practical standpoint, look, there's 7,000 tons of gold in the Fed's basement vault. Is it something they care about anymore, or is it something that they contemplate when they look at the world?
I have to be honest with you, I don't think they think about it all that much. Now, one reason may be that they've already got a lot of gold. The U.S. is the largest gold holder in the world. But I just don't think they think about it. Remember that interview with Ben Bernanke and who was it? Somebody asked him, what do you think about gold? And he looked like a deer caught in the headlights. He just tradition. That's why they hold it. He really didn't know. He was caught completely off guard by that question. I don't think he thinks about gold. I think that's a little hint that tells you they don't really think about it. Now, I think they will think about it if it went to $5,000 or $10,000 or something like that. But I just don't think it's on their radar. I don't see a lot of evidence that it's really on their radar.
So it's just a barbarous relic, as Keynes would say, to the Western central bankers.
I think that's the key issue is that you said it's Western, yes. Now, that's not true elsewhere, as we know. In the Far East, in Asia, and many other countries. Russia, Russia is one of the second biggest buyer of gold right now. So, it's only the Western nations that have this, frankly, archaic view of gold.
Amazing, and they've been right for the past, I guess, going from World War II forward. Their view has carried the day, hasn't it?
It has, yeah, you could say that. I think there's going to be a shift there someday, though. If you were in some of these other countries, you would get a very different view of gold, just from the news, from your neighbors, from how business views it, how government views it. You would get a very different view than what you would get in America and Canada and here. And someday that's going to matter, because they're going to have more gold than us. They're going to have more control of the gold than us. It won't always be on the COMEX. Now, that's not something that's going to happen next week. That's a very long-term trend. But that's definitely the way we're heading, and the data clearly tells us that's what's going to happen.
Right. And, yeah, that when that day comes, things are definitely going to be different. So, and that kind of ties in with the long-term forecast for gold, which based on the Asian demand and the emerging economy demand, got to mean it's going up.
For me, it's even more than that. For me, if you push me and force me to tell you only one reason, what's the one reason, the biggest reason I own gold, it's because I don't trust that what the many governments in the developed world right now are doing are going to work without consequences. We can debate till we're blue in the face about whether it was the right thing to do to print money. That's a fun debate. That's a different debate. The fact is we're doing it, and I don't believe in free lunches. I think there are going to be consequences. Even if you're a deflationist, if you think it's totally going to be deflation because there's way too much debt, and to unwind that's going to have to be deflationary, I understand. I just don't think that what the governments have doing with their currency is not going to have any effect. Of course it's going to have some kind of effect. It could get quite ugly. I hope it doesn't. I'm one of these guys who doesn't want to see $10,000 gold, because what that means, if we actually get $10,000 gold, that's because things are going to be very, very bad, and a lot of people are going to get hurt. It's not going to be easy, and you can thank all the leading politicians of the developed world if that happens.
Yeah. Oh, I wholeheartedly agree with you. The last thing you really want to see is $10,000 gold. That's not a good thing. And it's not something to want. But I also agree with you that the policies that these bankers are following are kind of making it inevitable, aren't they?
I think they are. And I know there's the question out there, well, why hasn't it happened yet? Well, that's another topic, but you can't tell me that all the money that's been printed is going to have no impact. Just as an example, and this has been around the internet, but it's very telling. The Federal Reserve was created in 1913. Its balance sheet through 2007 was $800 billion. We're on pace right now to print, even with a taper, over $700 billion just this year. That's 100 years worth of new money in just 12 months.
Yeah.
So are you sure there won't be any fallout from that? I mean, that's the question to ask yourself. And when you push me, that's the number one reason why I'm holding onto my gold. I still buy on a regular basis. And silver, too.
Agreed. And going to talk more about that up next on the Financial Survival Network. We're talking with Casey Research's Jeff Clark.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at noconstitutionzone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's noconstitutionzone.com.
And we are back. Financial Survival Network. I'm Kerry Lutz. We're talking with Jeff Clark of Casey Research. So all the paper in the world, all the money printing taking place, and you got to expect inflation and havoc around the world. And the only wonder of it is, why hasn't it happened so far? These geniuses, central planners, running the world's money supply, they've managed to avert it so far. But have you been to a restaurant lately? Have you been to the supermarket? I mean, food prices have started going up again big time, haven't they?
They have. I think a lot of that is probably due to the drought that's happened here in California where I live, and it has been quite serious. So that's a natural reaction that, that's going to happen. But there's no doubt that it's more than just food. Gas prices. I have two kids in college. Those costs are going up. They're certainly going up more than 1.2% a year or whatever the government tries to tell us the inflation rate is. So, again, though, I think even the official measure, what they use, what they call the CPI, even think that measure at some point is going to be much higher than where it is. I think 4% would be conservative compared to where I think it's probably headed. 6, 8, 10% is clearly not out of the question in terms of my mind. Now, it may not happen, this month, next month, whatever, but I think it's definitely coming. Which means, by the way, the real inflation will be higher.
Yeah, that's just the stated rate. That's what they claim that it is. And, they've so denuded the CPI, that's Consumer Price Index, that who knows what the real rate is. Nobody can tell, although John Williams makes a pretty credible stab at it. And then when the world wakes up to what is really happening to the purchasing power of your dollars, then forget it. There's going to be a rush for precious metals, right?
I certainly think so. It's happened before in history. We've seen this movie before. We've been here before. Just as an example, back in the 1970s, a lot of us look back to history to try and figure out, well, what could gold and silver do again? If you look at what happened in the latter part of the 1970s, if you remember, there was a huge sell-off in the gold market back in the middle of the 1970s. We just mimicked that to a large extent. Silver, at that point, from its 1976 low to its 1980 high, went up almost 1,200%. Gold rose 721%.
Wow.
All those gains happened in about 3.5 years. For silver, it was 4 years. if you applied that kind of gain to today, to our 2013 lows, silver's probably, silver in that scenario would hit $240. Gold would hit $9,700. And that would happen by late 2016, early 2017. And that's just if we follow what happened in the 1970s. Now, I'm not saying that's what's going to happen. I'm not saying they're going to hit those prices, nor are they going to hit them in those time frames. It'll be different. History doesn't repeat, but it rhymes. So it's, it could be earlier, it could be later, the prices could be lower, they could be higher. I'm just simply saying that based on history, when we saw a very high inflationary environment back in the late 70s and lots of turmoil around the world, that's what gold and silver did. You apply that to today, and those are the kind of prices that we could see not very far down the road.
Okay. And that brings us to the miners. Boy, you talk about a landscape that is strewn with wreckage, but there's still a lot of companies that have survived. A lot of companies have advanced, but this is just a little preliminary advance, setting the stage for the big advance, isn't it?
Oh, sure. No matter how you measure it, PEs, ratio to gold, past stock prices, no matter how you measure it, they're still dramatically undervalued in spite of what they've done in January and February this year. So they have a lot of catching up to do. If you looked at the price of gold and laid that on a chart, and then you looked at the price of GDX or GDXJ, the junior miners, and put that on the same chart, the difference between the two gold stock funds and the gold price is at its biggest gap ever.
Yeah, it's huge.
So that tells you just how dramatically undervalued the stocks are. And that's as of the end of February, after the stocks had already shot up. So there's a tremendous amount of potential in these things. A double in the junior stock is simply just going to be the beginning. And I don't, want to get people too excited, and I don't want people to get overweight and spend money they shouldn't or don't have. But the rebound is just going to be the beginning. And of course, that depends on if we're right about where gold and silver are ultimately going. I think we are, but obviously there's no guarantee. But if we are, you're talking 10 baggers in the juniors, among many of the better juniors. And you brought up a good point. This is a good time to make sure you own the best of the best, because they don't all rise equally. It is survival of the fittest right now, and so you want to make sure you're owning the better companies, absolutely. So buying an index or something like that should really only be done with someone who has just a very small amount of funds, a few $100s or something to invest. Otherwise, you really want to try and focus your speculative portfolio where your gold stocks are on the individual stocks that are the absolute best companies.
So define quality for us.
Oh, well, for us, that's easy. We have our 8 Ps, all 8 factors that all begin with the letter P, people, property, and things like that. So politics is another big one. So we don't recommend a company unless they pass all of the 8 Ps. It's a system that we go through that Doug Casey designed many years ago that we still use to this day. And I will tell you, I've been on many mining tours with other analysts, and all they're looking at is finances and the production of a company, how profitable they're going to be and all that. Of course, that's important, but they're not looking at other things. They even asked one of these analysts on a mining tour one time, I said, well, what about the politics of such and such a country? We were talking about a specific stock, and, where this great asset is located has very high political risk. And he goes, well, they don't pay me to assess the political risk. I'm like, well, you have to look at it. You can't recommend a stock without considering the political risk, So you have to look at all parts of the elephant, and, of course, that's what we try to do. We have an exciting new stock pick coming up in our April issue here out in a couple weeks, so I'm very excited about it. It does have a little bit above average political risk, but, you got to go to where you got to go to where things are now, and it's not easy to find high-quality, high-grade assets that are big in areas that are, easy to mine anymore. You're going to have to go to the outlying areas and outlying countries. And this stock has extremely high leverage to gold and has done extremely well so far this year. And with this pullback we have right now, we think it's going to be a great time to enter a position. So this stock's going to go a lot higher with the amount of production they have coming online here. So, but that's sort of a long-winded answer to your question.
Yeah, well, it makes total sense because you could be in places like Argentina and Peru, which have real hostility towards mining operators, have amazing deposits, high quality ore grades, but at any time they could swoop in and say, windfall profits tax, or you're not being environmentally sensitive enough and we don't want you here, and you're finished. What do you do? That's
right.
The end of
That's
it,
what's
right?
happened to many large deposits. Look what's happened to Pascua-Lama with Barrick, That was supposed to be in production by now.
Yeah.
And it's at least 2 more years off. Some analysts think it'll never go into production. I hope it does. I can't imagine the government down there just deciding to leave all that revenue just sit there in the ground. I'm sure they're going to want some of it. But yeah, they've, essentially put that to a halt. Probably there's so many examples of this, but the one I like to use is the Cupul deposit, or not Cupul, but was the Fruta del Norte deposit down in Ecuador that Kinross eventually bought. And that was, back in 2007, I believe, early 2008. I mean, that is arguably the richest deposit found in the last 10 years. And guess how much gold it's spitting out? Zero.
Nothing. Right.
Here we are, how many years later? They're not even working on it anymore. Everybody's been laid off. It's just sitting there. This huge, rich deposit is just sitting there, and it's solely due to politicians in that country that they just want too much of the pie. And the company said, look, we can't operate and be profitable under that tax regime, and so they shut it down.
And eventually it
and
comes.
There's many examples like that, So you have to be very careful. You want to try to get into countries that, at least are going to be welcoming and not going to try to tax you to death. So
yeah, eventually it does come down to making a profit on mining, regardless what the politicians might think. So Jeff,
yeah. Oh.
So on that note, we have to leave you, but we want to find out more about you. Subscribe to the various Casey publications. We should go where?
Oh, it's really easy, just caseyresearch.com. And if you are new, if you're not investing with us, I encourage you to check out Big Gold. That's the letter I'm the editor of. It's an entry-level letter. It looks at producers only. We also cover gold and silver themselves. Like I said, we have an exciting new stock pick coming up in the April issue. It's a great place to start, especially if you don't have a lot of money. And we're pretty proud of our track record in there. Getting through the crash last year, we actually shorted gold 3 different times, made over 100% of our money on that. We used that as a hedge. But don't misunderstand, we're very long gold. So. But this is a great time to buy. We demonstrated just last week that March is the weakest month of the year, regardless of the scenario: bull market, bear market, flat market, mania. March is actually the weakest month in all those scenarios to buy, so that your timing couldn't be better to pick up on this dip right here. So we're very excited about where we think the gold market's eventually going.
All right, Jeff, thanks so much. And of course, you'll see a link in the show notes on financialsurvivalnetwork.com website. We'll talk to you again soon. Thanks so much, Jeff.
Thank you. You're welcome.
FSN Radio. It's all about what's next.